What's going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we are back with another portfolio update, as well as some announcements and news. So without further ado, let's dive right in. Currently, we are at 1,065 subscribers, so shout out to everyone who has been supporting the channel, and we are at 45 videos, and I'm currently filming the 46th video, which is also the 44th portfolio update. For those of you who are new here, if you haven't already, please smash that subscribe button. It helps keep me motivated to continue making videos like these and continuing to document my journey. And most importantly for everyone else, please smash that like button as well. It helps with the YouTube algorithm and for further growing this channel. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, if you are not new here, you can glance over this or skip over it. It's completely up to you. But for those who are new, this is my game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. So I currently have two sources of income. One is remote work income, pretty stable, pretty consistent, and the other is business income. Now, this one does fluctuate up and down depending on the seasonality of things, but it allows me to contribute anywhere from $300 to around $1,000 plus per month into my Robinhood taxable brokerage. And I am treating my brokerage like a business with the goal of aiming for at minimum of 30% plus high yield. And I aim to achieve that through investing into high yield income ETFs primarily. These are funds like KQQQ, QDTE, BLOX, HOW, Chippy, and so many more. The list goes on and on and on. I am taking the approach of a core satellite investing strategy. So basically, I will be alternating between anchors and satellite ETFs. If you guys want to learn more about this, you can do your own research, your own due diligence. I'm not going to be breaking it down, but it's a pretty time-tested strategy. And then income and stability is the focus for my high yield income portfolio. So cores will be stable focused and satellite ETFs will be income focused. So again, in order to understand or grasp this concept, you have to kind of keep this in mind. So the cores in my portfolio will be more of something that keeps my portfolio stable, holds it up in a down market, in a bear market, in a pullback, anything of that kind, in a correction. Meanwhile, my satellite ETFs, which are more income focused, they are probably going to swing up and down quite a bit depending on, are we in a bull run? Are we in a pullback? Are we in a bear market? That kind of thing. So you just need to keep that in mind. And yeah, you can do more research again on the core satellite investing strategy. So basically, I'll be reinvesting my weekly and monthly dividends depending on the funds that I'm invested to at that time through manually dripping. So rather than me having automatic drip set up, I want to stack my dividends to purchase whenever the market is down, whenever my positions are below my average cost per share. Okay, this is just so I can maintain good, healthy margins. I don't invest too heavily into a fund. And because these are high yield income ETFs, these operate a little bit different than traditional financial products like dividend growth stocks, for instance, or index funds or anything of that nature. So that's just something to bear in mind, all right? And drip plus always compounding is the ultimate portfolio growth strategy. So I will be rinse and repeating this until my account hits $1,000 a month in dividend income. And again, we have a disclaimer. None of this is financial advice. This is strictly for entertainment purposes only. I am some random dude on the internet. I'm just documenting my journey. By no means am I telling you to buy what I buy, copy what I do, or even just give you guys advice. This is, again, me documenting my journey. I may succeed, I may fail. You guys get to see it all here on the channel. Now, last, before we hop into the portfolio, this is my dividend income milestones while I grow my small portfolio. This is basically so I can celebrate the small wins leading up to the bigger goal along the way. I will have to reset this for next month because I do not believe at this current pace that we are at that we will achieve the second goal again, let alone even the third goal. So originally I was on track to actually get pretty close to achieving the sixth goal because of the way that I was investing into these funds, but you know, I made some changes to allow me to sleep better at night and not really get so high stressed about everything. So you guys can pause this and look at all the milestones leading up to the big goal along the way. But without further ado, let's dive right in. So hopping into Robinhood, this is the portfolio. We are currently sitting at $5,586.41. So we are a little bit up compared to the last portfolio update I did. But as you can see, we are sitting on $3,593.05 in cash. and my margin total is still the same of $7,617.16. So I haven't touched any of my margin yet. I still have plenty of cash to use up for this portfolio, but we are slowly but surely increasing my position sizes. So I did purchase some funds since the last video that I did. So let's dive into each position and cover everything. First up is KQQQ. It's currently sitting at $28.57 a share. My market value is $485.69. I am up $2.42 or 0.50%. My average cost per share is $28.43. I have 17 shares with a portfolio diversity of 24.37% and a maintenance ratio of 25%. As you can see also down here, they paid out 41 cents a share, and because I have 15 shares, I had received $6.15. So pretty happy with that. This is a monthly payer, so just keep that in mind. But this is one of my cores. This is more stable. It's going to hopefully hold up my portfolio come the rain, come the shine, okay? Next, we have Chippy. It's currently at $54.40 a share. My market value is $380.80. I am up $2.02 or 0.53%. My average cost per share is $54.11. I have 7 shares with a portfolio diversity of 19.10% and a maintenance ratio of 25%. Next, we have BLOX. It's currently sitting at $18.66 a share. So I'm happy to see that it is back in the positive, at least for now. My market value is $261.24. I am up $2.84 or 1.10%. My average cost per share is $18.46. I have 14 shares with a portfolio diversity of 13.11% and a maintenance ratio of 25%. Next, we have NVDW. It's currently at $41.33 a share. My market value is $247.98. I am actually down $3.09 here, or 1.23%. My average cost per share is $41.85. I have 6 shares with a portfolio diversity of 12.44% and a maintenance ratio of 30%. Next, we have QDTE. It's currently at $34.57 a share. My market value is $241.99. I am up $3.49 or 1.46%. My average cost per share is $34.07. I have 7 shares with a portfolio diversity of 12.14% and a maintenance ratio of 25%. Next, we have PLTW. It's currently at $36.78 a share. My market value is $110.34. I am up $6.09 or 5.84%. My average cost per share is $34.75. I have 3 shares with a portfolio diversity of 5.54% and a maintenance ratio of 40%. And last but not least, we have HOW. It's currently sitting at $54.03 a share. My market value is $108.06. I am up $9.84 or 10.02%. My average cost per share is $49.11. I have 2 shares with a portfolio diversity of 5.42% and a maintenance ratio of 30%. Overall, the portfolio is looking good. And if we hop over here, the only position I am currently down on is NVDW, which is totally okay. I plan on investing some more, but I already purchased some more shares yesterday, so I'm going to be waiting to see how the market performs today. If it decides to dip, I'm going to be looking for some opportunities to invest more into all of my positions that are going down in the negatives. So that's going to be an opportunity. I am really sad that I only have 2 shares of HOW and only 2 shares of GLDN, but it is what it is. And so I got to work with what I got and stick to my strategy in order to protect myself from the downside. All right, guys, so hopping into the dividend sheet now, I zoomed in super big so you guys can see it. I want to focus, like usual, on my market return and total return, and as well as share what changes I've made to this dividend sheet. So let's hop into total return. First, we are up 1.82% with BLOX, 8.90% with HOW, negative 0.33% for NVDW, 5.91% for PLTW, 9.09% for GLOW, 2.25% for Chippy, 2.06% for QDTE, and 1.66% for KQQQ. So that is the total return for each of those positions. And moving into market return. So total return includes the dividends that have been paid out. Market return does not. BLOX is at 1.57% market return, 7.78% for HOW, negative 0.76% for NVDW, 4.86% for PLTW, 8.57% for GLOW, 1.87% for Chippy, 1.73% for QDTE, and 0.77% for KQQQ. I have made some changes to this. So I did add a taxes section on here. So it will automatically deduct around, I believe, 30%. Yep, 30% from the total dividends that I got paid out, and it's going to tell me how much I am paying in taxes overall. Now, this is just so I can put away to the side. I will probably invest this into a bond or treasury of some kind. That way, I can set that aside, and when taxes time comes up, I can pay that towards taxes. Now, I don't anticipate that I will have any tax obligations for my stock portfolio in particular, because I did do some tax harvesting not long ago. So I'm not really super worried about that, but I wanted to create this so that way you guys can see what the total return is accurately, because now I am actually including the taxes with the total return. Now, I wanted to hop into the dividend log. So I have updated every single distribution that we have received this month. For KQQQ, it's currently the biggest dividend payout, which is super nice to see. Of course, it is a monthly payer, so that's something to bear in mind, and which is why I got paid out so much. Not really sure what's going on here. I will have to figure out what's wrong, but this number is actually supposed to be $269.09, which means that I am $730.91 away from my $1,000 goal. So that is the current state of this situation. And just diving in here to my allocation calculator, I just wanted to share with you guys how far we are from our allocation goals and then also our share amount goals. These are the target allocations that I have for each of my positions. So 10% for BLOX, 10% for HOW, 10% for NVDW, 10% for PLTW, 10% for GLDN, 30% for Chippy, 20% for QDTE, and 10% for KQQQ. If I take a look here, we are 5.30% from achieving the allocation for BLOX, 8.10% for HOW, 5.54% for NVDW, 8.04% for PLTW, 7.23% for GOOW, 23.09% for Chippy, 15.66% for QDTE, and 1.28% for KQQQ. Now, if we hop over to the side here, you guys can see my target share amount and the gap that I have. So I am 16 shares away from achieving my goal for BLOX. I am 8 shares away for HOW, 6 shares away for NVDW, 12 shares away for PLTW, 10 shares away for GOOW, 24 shares away from Chippy, 25 shares away for QDTE, and 2 shares away for KQQQ. Probably if we see another significant dip in KQQQ, that will be when I invest into getting these target shares. And once I reach the target share amounts that I want to achieve, from there, I could potentially increase the amounts over time. Whatever makes sense at the time, I'm just going to carefully and slowly DCA into the positions that I want at fair prices, as Warren Buffett would say. Now, real quick, I did want to share this. So I did decide to move forward with Snowball Analytics. I'm not going to be covering it in depth today because I still have to figure out my way around it all. You know, this is just something that I think would help better streamline things. I do still love my dividend sheet and will continue to use it because I can customize it as I please, but I will probably be referencing Snowball Analytics in the future. So I just wanted to share that and update you guys on that. Now, hopping into X, if you guys aren't already, if you could give me a follow, that would mean a lot to me. I'm currently at 47 followers and I have a goal to achieve 100 followers by the end of this month. But on here, I post live updates of when I buy, when I sell, my opinions on certain things happening in the markets, and basically just anything related to the markets or my opinions on the markets as a whole. So if you guys are interested in supporting me here, it's at I'm Nomad Investor. Again, you can follow me at I'm Nomad Investor. Hopping in a post from Shanaka86, which is someone who I've recently been following. He says, the thermodynamic trap. The United States just made the largest peacetime bet in human history, and almost nobody understands what actually happened. On November 4th, 2025, President Trump signed the Genesis mission into law. Officials call it the Manhattan Project of AI. The Department of Energy will fuse 17 national laboratories with Google, Anthropic, NVIDIA, OpenAI, and Microsoft into one closed-loop system where artificial intelligence generates hypotheses, commands robotic laboratories, and feeds results back into itself. The goal? Compress scientific discovery from years to hours. The problem? Genesis has zero dedicated funding. Section 7B of the executive order states implementation is subject to the availability of appropriations. The One Big Beautiful Bill Act adds $3.4 trillion to $5.5 trillion in deficits over the next decade, while cutting Medicaid by nearly $1 trillion. CBO projects 10.9 million Americans lose health coverage. The deeper problem? Physics does not negotiate. The International Energy Agency projects global data center electricity demand will double to 945 terawatt hours by 2030. That exceeds Japan's entire current consumption. 20% of planned projects face delays, from grid restraints that operate on decade timelines. Genesis milestones operate on month timelines. Here is what no one is saying. The United States is attempting to transition from a cognition-limited knowledge economy to an energy-limited knowledge economy. When you automate scientific verification, joules become the binding constraint on discovery, not talent, not capital, electricity. America just wagered $5.5 trillion in fiscal capacity on escaping thermodynamic limits through computational sovereignty. The 270-day demonstration arrives August 2026. Either the grid delivers the joules or the Manhattan Project framing collapses into the largest unfunded mandate in American history. There is no middle ground when verification costs have been inverted from mines to megawatts. The world changed this week. It simply does not know it yet. These companies could dictate how things look in the future, how things operate in the future. And they're going to continue to try their best to maintain control until a new player comes into the game that dominates them all. Now, as of right now, these are companies that I would personally be bullish on. However, this is not financial advice. This is strictly my opinion, and this is 100% speculation. But this is bullish, at least for the short term, for AI. Next, we have a post from XFUNDS. So they're introducing the newest ETFs in the XFUNDS suite. They have GLDN, which is Nicholas Gold Income ETF, SLVX, Nicholas Silver Income ETF, WEPN, Nicholas Defense and Rare Earth Income ETF, NUKX, Nicholas Nuclear Income ETF. We can't wait to share more about these exciting funds. Thank you for your trust and support. So these are looking pretty interesting. I think in terms of diversification, obviously the defense and rare earth income and the nuclear income ETF are definitely going to be top two for me personally. I'm very curious, which ones do you guys think are the most interesting to you? Comment down below. Now diving in a little bit deeper, here is a post from High Yield Hustle. He says, there are massive bull cases for the sectors these ETFs cover. NUKX is focused on nuclear energy. The AI boom is going to require massive amounts of sustainable and reliable energy. Nuclear is that solution. WEPN focused on defense, rare earths, and cybersecurity. Defense spending is the highest since the Cold War. Cybersecurity demand is set to go parabolic. Rare earths are becoming a priority across the globe. Both of these ETFs provide income packaged with unique holdings we have yet to see in high yield. And now I'm going to read the original post that he is quoting, which says, XFUNDS, creators of BLOX, will be dropping these two funds that we've already mentioned. I love seeing releases that for once aren't all tech to allow people to diversify income portfolios. Here is some of what we know so far. Strategy. It appears these will operate similar to BLOX. Put and call credit spreads will be utilized, as well as synthetic covered calls. The holdings for WEPN, companies in national defense, aerospace, intelligence, weapon systems, cybersecurity, defense electronics, also companies in refining and recycling of rare earth metals and materials. There will also be a commodities portfolio with exposure to aluminum, copper, uranium, lithium, cobalt, steel, and platinum. NUKX is going to be focusing on companies that have business activities in the production of nuclear energy, uranium exploration and mining, nuclear fuel processing and enrichment, reactor tech development, engineering and construction of nuclear power facilities, and waste management and safety tech. There will also be a commodities portfolio with exposure to uranium. I think these are super interesting. This is going to provide some diversity for people who have high yield income portfolios such as myself. Next, we have a post from Richie B, aka Wanna Be Fresh. He says, today's PPI came in exactly as expected on the headline, but core PPI, the one that Fed actually watches, came in softer than forecast. That means producer inflation isn't getting worse and is actually cooling under the hood, which is what the Fed wants to see. Cooler core numbers increase the odds of future rate cuts because it shows pricing pressure is easing. Not a massive bullish blast, but definitely a step in the right direction for markets. Kind of expected, to be honest. And then last, we have one more from High Yield Hustle. It says, High Yield Hustle thoughts with a brain emoji. It says, thankfully, I believe that people have woken up to the fact that full porting or taking HELOCs out for one fund is a bad idea. I never want to see anyone get burnt, and full porting one fund is essentially a coin toss with your net worth. I go into each holding with an exact plan for it. If I want to long a single stock for years, then I'm going with curve. If I'm going to set and forget, I tend to use funds that are indexed or in the debasement trade. If I'm using Rex or Roundhill, I'm marking off my buy levels well in advance, staying patient for my entry and placing the dividends into my anchor funds and trimming profits. I'm never going to enter a position without an exact plan for that position. It's called a portfolio for a reason. I get asked a lot, this fund or this fund. unless one is massively better, the answer should typically be both. I don't want to just diversify by holding, but also by fund manager and strategy. This is so good. I really like that he broke this down. This actually helped me even get a better understanding of my overall thesis and strategy for my portfolio. So I'm really thankful that he shared this, and I hope you guys found value in this as well. Now, hopping over into Yahoo Finance, I'm not going to be covering today the headlines, but I do want to quickly touch on the futures and where the market could possibly be heading. Again, pure speculation, not financial advice. So the S&P 500 futures is up 0.18%. The Dow is up 0.15%. The NASDAQ up 0.23%. The Russell up 0.17%. The VIX is down 1.13%. It's currently sitting at 18.35. And gold is up 0.39% also. So that is where things are currently looking at, with the VIX being a lot lower and finally breaking below the 20s. And seeing that the futures for everything is pretty much overall in the positive, I think we could possibly see a green day today and leading possibly into the week. But who knows? We'll see. This could totally be a bull trap, and then we may possibly see some more pullback. I have no idea. However, I will be waiting and sitting with my dry powder to invest more into the funds that I believe in. Anyways, guys, I hope you enjoyed today's video. If you guys have any comments, questions, suggestions, or feedback, comment them down below. And most importantly, if you are new here and haven't already, make sure to smash that subscribe button. And for everyone else, make sure to smash that like button. It helps with the YouTube algorithm and for further growing this channel. So without further ado, until next time, guys, peace.